What's up, Washington? Let's talk about the housing market. I imagine that you've heard many different things from family, friends, colleagues, even our major news media outlets. There's lots to consider when we're thinking about the housing market, but one single data point really doesn't tell us the whole story. So let's take a deep dive and look at some market trends, some current data, some historical data trends, some different statistics, and also be considering local economics and specifically our urban growth plan and how all these different factors are impacting our housing market. Today, I'm going to be sharing my expert opinion of these different data points that I'm sharing. Just so you know, my background is as a real estate broker. I am part of the Love Where You Live real estate team out of Windermere, Alderwood. So again, I'll be sharing my expert opinion, but it's really up to you to take this information and to evaluate it and to use it however it works for you to help you make the best decisions that you can as you're reaching towards meeting your real estate goals. If you have questions or comments, please feel free to leave them below and we will do our best to respond to all of those. So let's take a look. We're going to start by talking about changes that are occurring within our communities, specifically industry growth, infrastructure growth, and population growth. Because it's really important to remember that we're talking about Washington State, and specifically the Northwest region, where it is very popular. Many businesses are coming here, and many families continue to move to our area, both for the economic stability within our region, but also just the many natural nature recreational draws to our area as well. So as you can see, we have had that steady trend line of growth since 1990. And I know for our residents that have lived here for many years, we've seen this, we've experienced this. We often are driving down the street and talking about there's something new, or that's different, or that left. These changes continue to evolve in our region. These are some data that was shared by Snohomish County about the specific cities within the county and the growth that they are anticipating each of these counties will have. I did recently take a class where they talked about the urban growth plan and just the growing industry, and they actually cited Everett to be experiencing a population double within the next 10 to 15 years. So that would be a lot more growth than this chart is showing. So I think these numbers on this chart are pretty conservative. But if we, again, look at that data over time, we know the growth is not slowing. That's largely because of the industry growth that our area has experienced. We are now home to Amazon. Amazon has their largest warehouse here in the Arlington area, and they also have their facility centers out on Spencer Island, and they have some in Everett, and they're opening a new warehouse in Everett as well. Microsoft has a long history in our region, along with Starbucks, Costco, and Boeing. I'm very glad that Boeing was able to get through their strike and they recently have a new order of planes. So a lot more stability for our friends working at Boeing. There are plans in place in Arlington for the Cascade Industrial Park, which is going to be a 11 warehouse location where they're anticipating over 11,000 new jobs to come from, and Tesla will be one of those new warehouses. So also up north in Arlington, the Puget Sound Energy has a new site where they're going to be working on renewable forms of energy and how to recycle batteries. And so I anticipate that there is also a long-term growth, economic growth with jobs that will be tied to that location as well. So as we follow these local things occurring, maybe you've heard of one I didn't mention, you could throw in the comments, but business continues to thrive. The job market is very strong in our area, and we're seeing more people moving here for the opportunities for jobs. As you can see depicted in this chart, that we've had really steadily growth with our employment sector. So I'm really proud of our state for their intention behind meeting our housing demand. The urban growth plan really talks about how our communities can do different things to both preserve the communities that we know and love, while also making room for the growth that is needed based on the demand from our infrastructure growth, specifically tied to the job market. So these are some of the goals. I pulled these directly from the urban growth plan. These are not all of their goals. There are others if you'd like to look. And also this year we are due for a new plan. So this is something they release every 10 years. And depending on the city you live in, it may already be available or it should be available by the spring at the latest. The big driver again behind all of this is really that urban growth and how do we prepare our cities for that. Today, we're kind of coming from the lens of housing and that demand, but considering all these other factors that are impacting it. As a lifetime local, I am very happy to see that they're being intentional again about preserving our recreational lands and making sure that our parks remain a big draw and an attraction that many of us enjoy using throughout the year. Something that is changing to help with that housing demand is really their regulations around permitting. So we're going to talk a little bit more about what that looks like specific to Everett, because I really believe Everett is a good example of what these different communities are doing. Because again, every city in this urban growth area, they do not have a choice. They cannot block the growth. They have to have plans submitted to the county and to the state to show that they are making efforts to prepare for this growth. In the state's eyes, it is affordable housing. The term that is also interchangeably used with affordable housing is high density housing. And so it's really about providing more housing opportunities. But again, the state is seeing that as smaller units that are more readily available for people. So that just something just to think about as we continue to talk here, because it means a few different things. Oh, the other thing too, I'll say is that there are opportunities for citizens to speak up about their opinions or concerns that they might have. But you do need to be in the know of your county and your community, your neighborhood's process, because it does look different from city to city. And while there is an avenue for you to go, it's not always broadcasted in a way where the information is easy to access. So if this is something that is of high interest to you in your community, I would recommend going to your community webpage to look at more about that process and how you can get involved in those town council meetings and share any of concerns you may have. So here are the urban growth boundaries that the state has identified for that high density housing. Again, that's what they see as affordable housing. So these are areas they not anticipate. These are areas they are planning for the growth. When I first saw this, I certainly was surprised to see areas like Granite Falls, Gold Bar, Salton, in this high density urban growth centers. But they are experiencing that growth. When we look percentage wise, the most job growth actually came from Granite Falls. Yes, Granite Falls. Now, the number of jobs is not very high, but the percentage, they had 10% job growth within their job market this last year. So that's pretty substantial. So this next map again is showing those urban growth areas, but now we're looking at the current density within each of those communities. So the number of households that exist in those areas. So we can see that Everett has the highest density currently, followed by Linwood, Bothell, Mill Creek, Marysville, and even parts of Lake Stevens. But really the whole region again is experiencing that growth, and we expect each of these areas to have higher density housing as we continue to move forward. So as I mentioned, I really believe Everett is the best example to show what a community can do to really meet that growing demand for housing, while still, having a good community to offer to its residents. Everett has redone the marina down in the harbor, which they've done just a fabulous job there, adding the skywalk and more restaurants and just the parks down there. It's really become a great draw for the community. I know I like to go to their farmers market in the summertime and then walk down to the marina just to look at all the activity with the parasailers out there and just lots of fun things to see. Also in Everett, on the other side, the river side, they have the Riverfront Park, which is in phase 1 of 4, where they're going to be building a industrial park where there's going to be restaurants and small business opportunities. but also a recreational park where they're going to include a skywalk that goes over the river to the park. So I'm really looking forward to seeing how they're going to really develop that area along the river there. Right now, we can see the housing that they've added, and so there are more plans to make it more of a recreation or a walkable community there for those residents that are currently living there. So as Everett paves the way, they're really trying to meet that demand by providing more high density housing. And so that means that the zoning codes have changed and they're changing zoning regulations at a rate that is so quick that they are actually leaving the redacted regulations up so people can see those changes because they may start on their journey of what their build project, and through that the regulations could change. So they're doing a really good job of being transparent and showing the community what those changes are. But things you might think about, they're changing lot size restrictions. They're allowing for 2 to 6 units per lot to be built. They're changing the setbacks or the amount of distance that you have to have between a structure and a property line. They're changing parking restrictions. They've also changed the height for buildings. So previously, the tallest building in Everett, I think it was 6 stories in downtown Everett, and now that one can go up to 21 stories. And there are parts of Everett where it was 2 stories that now you can have 7 or 11 stories. So they are really doing a lot to prepare for high density housing. And so you'll see what that looks like more as we continue to talk today. Again, I mentioned earlier that Amazon has a new warehouse going in there. And when we look at Everett as a whole, South Everett outpaced all of Snohomish County with their average home price growth. Um, Most of the county, the average was, oh gosh, I think it was 5%, 4.9%. I know I cite it later on. Um, that actually I recall that is a current month. That was last month was the 4.9%, but year over year it is over 8%. But when we look at last month, that 4.9% that the whole county experienced in growth, South Everett specifically had 14.9%. So they are outpacing their valuation, their home valuation, much more than neighboring cities, which, I mean, 5% is great no matter where you're at, but 15% is exceptional. So other things for Everett, I know we talked about the improved parks and recreation facilities. Also, the Aquasox Stadium is being redone. The Everett Memorial Stadium is being redone. So they are just doing a lot. I think about 4 years ago, they put it out to the community as well, where community members could submit proposals on how to revamp their different parks and communities throughout the city. So they're making a lot of effort to just really improve the quality and just improve like the resources and just the different opportunity draws within the area so that it's just a nicer community in general. So looking forward to seeing how that continues to evolve. The light rail is projected to be in Everett in 2037, so it is a ways away. However, we do know when we look at how the light rail impacted home values in Shoreline and Linwood that it certainly had a positive impact on the value of the homes that were along that light rail. And we also saw more zoning changes come into those areas to prepare for more high density housing. So Everett's got a jump start on that high density housing, but as the light rail comes in, I imagine that we will see even more zoning changes to allow for even higher density housing in those pockets that go along the light rail. Currently, I know with the urban growth plan, if you are within a half a mile of a public transit station, you can actually have 6 units instead of 2 units, which is everywhere else statewide. So here's an example of Everett specifically. This is somebody who on their lot where there was a single family residence, they built a 500 square foot detached unit, and it's very nicely done. And then they decided to reclassify it with the city as a condominium. So now their single family residence went to a 2 condominium association property. So there's 2 units within their HOA, and they sold this 500 square foot condominium that they built in their backyard for 383,000. Wow. What a great opportunity for a resident to also become an investor in real estate. When I think about my why for real estate, it's really to help our local residents to really maximize their personal investment within real estate. 'Cause I think it is the um, safest and most reliable way to have that long-term growth. And these new opportunities for building the additional units are really opening the door to a lot more opportunity. Statewide, everybody now can build an additional unit on their lot as long as they meet a couple of requirements, such as you can only have an additional unit if you are on the minimum, if you meet the minimum requirements for your current zoning. So for instance, there's parts of in Snohomish County, like in the Clearview area, where they are zoned R5 or rural 5, meaning you can have one residence on a 5-acre lot. So if you are on a 5-acre lot or larger, you can now build an additional unit on your lot. However, if you are in R5 zoning and you're on a 4-acre lot, so you're smaller than that standard lot minimum, you may not build that additional unit. Um, but really statewide, there were a lot of areas where that kind of building was not allowed, and it was a very long permitting process to get it, where now they are trying to open that door, reduce the permitting time, and allow current homeowners to seize this opportunity and to build additional units and to provide more housing opportunities for people within our community. So this is a good example of one here in Everett. And as I mentioned, Everett's, you can see the example of how they have redacted some of their regulations. So you can see what the old regulation was, what the new regulations are. Everett has impressively got their permitting time down to 15 days to get an approval for permitting, which is very, very low. So lots of growth coming, not just to Everett, but really to all of our communities. Okay, so as I mentioned, this is the light rail. So we can see where the light rail is planning on going. And we know that, along these light rail lines, we know what it has done to areas like Shoreline and Linwood. And that is going to continue to expand as we build the light rail out into these new regions. When you look to on the right here, this bar graph is showing the permits that were approved in Snohomish County. So as you see in 2016, we were primarily approving permits for single family residences with fewer multifamily residents. And as we progress by 2019, we're seeing multifamily permits now kind of taking over. And that gap has just continued to grow. And I know we're going to continue to see that where we have more multifamily units because, again, in the state's eyes, affordable housing is high density housing. So, what does that mean for you and me? Well, it depends. Do you own your home or are you looking to enter the market? These are important things to consider. Do you want the possibility to be able to develop and build that detached unit in your backyard and to resell it down the road and, maintain ownership of your home while then being able to, potentially subdivide or condominiumize that unit in the back and resell it to somebody else? There is a lot of change happening and a lot of opportunity, and I don't think there's any reason that you cannot get a piece of that investor pie and really capitalize on your investment, because every real estate purchase is an investment, whether it is your primary residence or it's an intentional investment property, a second home, a rental property. There is opportunity for each of us to be capitalizing on that investment and set yourself up for a nice, healthy retirement one day. Okay, so let's take a little heavier look at some of the data and the trends over time that can help us really just understand isn't really the right word, that can just help us see and forecast what is anticipated to come in the future. This first chart here is showing the percentage of final sale price based on the asking price. So as we can see, 25% of homes, this is data from this last month, 25% of homes sold at full listing price, 30% were above listing price, and 44% were below listing price. When we look at this data point on its own, it doesn't paint a really confident picture of today's real estate market. But it's important to remember that year over year, we are still seeing the home value increase. In Snohomish County, year over year, we had 8% sales growth. And last month, Snohomish County had 5%. But we do know that December is historically one of our slower months. So it makes sense that these statistics are what we see, and they're a little different than when we look at the full year. But also, 30% are above full price. So there are still plenty of homes that have an appropriate pricing strategy to get the highest value that they can. But I do think, when we see 44% of homes sold below asking price, I think that there are many consumers that have the mindset of our real estate market as it was in 2021 and 2022. And so they're still really striving to get that top dollar and price their home at the high end of the market where their home is at, which is not the best strategy for where our market currently is. When we look back to 2020, as you'll see in some of our data slides to come, this was not the case. We were seeing nearly all homes selling at or above full asking price, which certainly impacted the market. It made it very difficult for first-time home buyers to get into the market because of the rate of growth that we were seeing. Many homes were even they were not appraising for their sale price, meaning they appraised at 500,000, but the person was willing to pay 600,000, which made it really hard for people who had bank financing to get a loan because they weren't able to get a loan for above the appraised value. So it was really difficult. So this really is a more stable market that we're in now. And as you can see, there are still plenty of homes that are selling for above asking price, but having an appropriate marketing strategy and appropriate pricing strategy for your home is really crucial to get that maximum value that I know our sellers want to get. So we'll talk more about what that looks like as we move on here. Okay, so here's our average sales price. So as you can see, there's again that steady growth. Our market is not going anywhere, even with the highs and lows that we experience through a year. Often the winter sales are a little lower than our spring or summer sales. So those things we see over time, but even still, that trend over time is only going in one direction. So can we predict the exact week that's perfect for selling a home or buying a home? We have ideas. We can certainly infer. We can certainly look at current data to guide us. However, we can't predict what tomorrow holds with certainty. There are too many factors outside of what we have control over. We could talk about politics, but we're not going to. Different world events, those things certainly have the ability to rapidly impact the market overnight. But even with those kinds of changes that do occur, we know over time the market's going to continue to climb, especially in our region. When we look at Snohomish and King County, we outpace the entire MLS. The growth is not slowing here. The demand is very strong because, again, we have limited resources, limited homes available for sale just because we only have so much land that we can develop. And that is why the state is adjusting those lot size minimums and adjusting those setbacks within the lot so that we can have higher density housing and try to capitalize on the land that we do have available to build on. Average days on the market. So if we think back to our pie chart, this certainly is part of that. When we think about the time that it takes to sell a home, if you're selling at or over full price, that's going to happen quickly. If you are not getting your full asking price, maybe you thought you could price your home at the top of the market and you missed the market and it took you a little bit longer to sell and you ended up in a situation with some price reductions. That takes longer time. So if we look, we can see when we had our crazy market around 2022, homes were selling off the shelf as quick as you could list them. And really, we're seeing kind of a more, again, stable or more regulated market these last 2 years where we've had those seasonality impacts to the market where we have a busier spring where things are selling quicker, or during the winter time, it's a little bit slower of a market. Sure, year over year, home prices still climb, but the time that it takes to sell a home may be different depending on the type of year. And there are other factors, obviously, that influence that as well. So thinking our average percentage of last original price. So this one I want to explain a little bit because it says last original price. So that means in theory, the home could have had a price reduction and could be seen as selling for full price because it sold for that reduced price. I think that this data point is one that is often used to show strength and stability in our market. But it doesn't always paint the most accurate picture because we're not thinking of the true original list price, not the last original list price. So just something to think about. And really, anytime we're looking at statistics, it's always a good practice to really try to understand the data points, because we can manipulate statistics to paint the picture that we want. My hope today is really that I'm giving you a broad paintbrush over it all and allowing you to form your own opinions of the direction of our housing market in Washington State. Um, anyway, so looking at this particular chart, again, we can see in that 2020, 2022, wow, look at how many homes were selling for over that list price. That was a market that we have not seen. And while, for our sellers, they were getting an incredible value for their properties, it was very difficult for buyers, especially first-time home buyers or bank financed home buyers. They struggled in this market because of how fast the value was increasing. So we did see it stabilize here in 2022 into 2023, and we will be able to soon make it the correlation with interest rates on our next charts. But again, when we look at these highs and lows here, these are pretty standard when we look over time. We can follow that same trend line. So that is a normal and stable market. And this market should not be our norm. And I think we need to start to retrain our thinking a little bit because this is not the market we are in. And I don't know that we will see this market again. And I honestly don't know that it is a good market for us to be in, just because it's not stable and I don't think it's sustainable. And, if we follow those trend lines exponentially forever, I think many people would never be able to buy a home. And I know that there are people that feel like they can't get into the market right now. But I want you to know there are ways that you can get in. There are programs out there to help you, and it is possible. You just need a good advocate on your side. So here again, here are our mortgage rates. So this is important to look at. Again, when we had record low interest rates, that is when we saw our housing prices climb. So while the interest rate was low, meaning our mortgage payment was low, but the value of the home went up, which also subsequently raised our mortgage rate. So something to be thinking about. Now, as our interest rates went up, here we see this coming in 2022 and into 2023. That's when we saw the values of homes start not to sell for full price, to not sell with after 3 days on the market. And we started to return to more of a stabilized market where it can take several days or even weeks to sell your home. And depending on the pricing strategy that you choose to use, you may sell it within a few days or you may sell within a few weeks. There's a lot more nuances involved in determining that appropriate pricing strategy. So here we can see our mortgage rates. These are predictions of what is going to occur in the coming years. So here's where we ended, and here's where they anticipate we will go. So not a lot of adjustments. We're looking at maybe a 0.5%, or 1 point of a change over the next year. So if you're waiting for these lows to occur again, I think you need to let go of that thinking because we're not going to see that again. Um, if we did, it would not, it would mean things were going wrong in a way that we don't want to see as a society. So again, though, I think it's important to also consider when we look over time, here's our interest rates. If we go back, to the 80s, wow, look at that high of 18%. And then if we look at where we're at right now, you know, uh, between 6 and 7%, and we go back really, there's the majority of our history, we were above that percentage point. Here's that record low we had. And I know this feels like an extreme high just because it came off of that record low, but really when we look at, being between 6 and 7%, that is a pretty common interest rate. And if we did like a historical average, we would be right on point with a historical average. It would probably be below the historical average. Um, so just something that I think is good to see here. And another reminder that a drop like this is not a good indicator of a strong economy for us. So not something that we certainly want to hope for in the future. Let's hope for, low sixes and a five. That would be great. The other thing I'll say too, to think about when you're looking at this for your mortgage. So your mortgage payment at 6%, on a $500,000 home is $2,400, and at 7%, it's $2,660. So about $240 difference a month, um, in that 1 percentage point. So that is substantial. It does feel like a lot, but when we think of that over the course of a year, that's around $3,000. And when you're thinking about the valuation of your home and how that equity that you gain over a year is in Snohomish County, it was 8%. So if we're looking at 500,000 for 8%, well, let me do some quick mental math here. That's like $40,000. So we are definitely getting a lot more equity in our home than we are paying for that extra interest rate. So when we have that long lens and that long thinking, I know it's unfavorable to, have that higher interest rate, but you will get it back when it comes time for the resale of your home, or if you'd like to potentially refinance down the road. The equity is there. So when we look at our inventory of homes, I know you've heard me say several times now that that is a big factor for our market in creating that high demand and keeping those housing prices climbing. And we can look at the entire MLS here. And the MLS is really northwestern United States. So it's not just Washington State. There are other regions in the northwest of the United States that use the MLS. But we can see that Snohomish and King County are far below the average inventory. And even though they do have their own highs and lows, in general, they are very, very low. So something to be aware of. And that trend line looks pretty reliably low. And I think we know that we have mountains on one side of us, and we have the Puget Sound on the other side, and we have very limited land in between. And so because we have limited land, we really are trying to rethink about how we look at housing and how we can meet this demand for housing by changing our mindset and changing how we're building. If we go back to that chart earlier about, the how multifamily zoning permits have been, more of those have been approved than single family residences. So I think we're going to continue to see that trend in our area where we are pushing, not we, not me personally, the state is pushing for that high density housing, which again, we're calling affordable housing. So if we look over a period of time, this is Snohomish County on its own. So you can really see how the inventory has become more and more limited as we've had that population growth that has continued to climb. So we kind of have an inverse relationship between a growing population and a supply of homes. So these are the median days on the market. Earlier, I told you that the average could be skewed, right? Because sometimes we have that home that is overpriced and sits on the market for 500 days and it pulls the whole average out of whack. So this is a much better depiction because it shows that median days on the market. And we can really see that in 2021, homes were selling super quickly. Even in 2022, when the rates started to climb, we were kind of still coming off of that high, if you will, there, and homes were just selling very, very quickly. 2023, 2024, we have more of that seasonality that we're used to when we look at historical trends, where the winter time is a little bit slower and the spring is much busier. There's a lot more activity. There's a lot more people looking on the market to buy. There are more people looking to sell their homes. So we see in the spring months, we have lower days on the market just because there's an increase in activity. And in winter months, we have a little bit longer days on the market. That does not mean that the selling price valuation is still not strong, because it is, and we can see that with our year over year data. So looking ahead here, and we can see this correlation really. I like this one because it shows us over a year. And we saw those highs and lows in many of these graphs that we talk about are common trend lines. So looking at just in 1 year last year, or I'm sorry, 2 years, just over a year. So when we're looking at just the 1 year, it shows us a good picture of, wow, in the, March to June area, we're seeing homes selling fast, and we're also seeing them selling for above list price. Now, when you go, gosh, everything is selling within a few percent, within 3% of 100% of list price, that's great. And in real estate, that's always our goal, is to get people to be within 3%, because that means that we are understanding the market as well and we're pricing it appropriately. But 3% is a lot. And for you to get 3% under what you're hoping, that is a lot. When we're thinking about a $500,000 house, that's $15,000. And I know that's no small amount of money to any person. And so it's really important that we understand the market that you are in and understand how you can have the best pricing strategy for that particular market to maximize your return on your home's value. As you can see, the winter months, both here, longer days on the market and also under that full price asking. So just something to be thinking about. Now, in this market, this is the market, we think back to our pie chart, right? We're looking at December. So we're seeing, if we look here, wow, 98%. So the average home is selling for under asking price. But remember, there was still that group of 24% of homes that were selling for over asking price. That's because those people understood the market they were in and they priced it appropriately, their home, so that they can maximize their return. So it's just something to think about. We have to really understand the market we are in. Again, here is another depiction of the importance of having that appropriate pricing strategy so that you are hopefully getting 100% or more, which we see happens in the first, 10 days of a home being on the market. The longer a home is on the market, right, the demand or the interest in that home goes down, which means that it often will sell for under that full asking price. Being priced appropriately, that first week out to the market is so crucial, that you have a good pricing strategy to really maximize your exposure and get the most people out from different types of markets, so that you can hopefully end up in a multiple offer situation and drive that price up to the highest market value you can. I included this slide to have a discussion about your marketing strategy and pricing a home, because it's not very black and white, especially not in today's market. Again, if we were back in that 2021 market, you could price a home at the very top end of the market and you would probably get above the market value, as we saw those pricing increments just continue to climb. Today's market, we really have to be a lot more thoughtful about each individual property and looking at the comparative properties in the area to determine what is the best price, but also what is the best strategy for the individual homeowner. Because depending on what their goals are, that will also impact your strategy. So when we met these clients, we had brought them these other comparables to show them and to talk about the pricing strategy for their home. They were very motivated to sell, and we told them we would like to get them between 850 and 860. But in order to do that, that we thought we might need to start lower again so that we could capture the highest market share of buyers out there to get the most exposure and to hopefully end up in a situation again with those multiple offers. So when we look at these other properties here, let's start with these first two in column A and column B. These homes are very similar. Similar square footage here, similar lot size, similar year built, and similar bedroom count. You will notice that the smaller home does have an extra bedroom. So that's a subtle difference. But the home also in column B here did have some nicer interior finishes as well. And it's a little bit bigger, so we can assume that the bedrooms, while there were fewer, they were larger bedrooms. So depending on the needs of the buyer, they they could be equally desirable when we're looking at them from the lens that we're evaluating. So when we look here, the home in column A, again, this is the slightly older home, smaller bedrooms because there's additional bedrooms, smaller square footage overall. They listed at 900,000 and they sold in 5 days for 925, so 3% over the asking price. When we look at column B, yes, we are acknowledging that this home is a little bit nicer. It has nicer interior finishes. It's 2 years newer. And again, we're going to say that it has more generous sized bedrooms as well. They gave it a valuation of 995. So I don't know that it's that much nicer than the home in column A. And unfortunately, they did have a price reduction to 945, and their final sale price was at 920. So they ended up selling for less than the home in column A, even though it's my opinion. I did go in these homes that this home was a nicer home. When we look at the home here in column 3, they did a great job pricing it. They got 100% of their ask price within 10 days. And it's my opinion that 10 days is kind of that magic time. If you're going to get full price, it's going to happen in the first 10 days. So they did a really great job. This one is a residence, so it's residential. The subject property that I shared with you, it was a detached condominium. So it presents as a house. However, it's not, it's a condominium, which does impact the value. So for me, it was important to share this one to show the homeowners of the subject property that here is a single family residence that is very similar to your home. However, it's a single family residence. So we shouldn't have our mindset around that we're the same as this house that got 869. That's a better house than we are. They got full price. So that's a good comparison to look at and know that we're not going to be at 869. When we look at this property on the right here, it is a condominium and it is very similar to the subject property as well. Same rooms, same bedrooms, slightly smaller square footage, slightly smaller lot as well. But we can see here that they listed at 850 and they had to reduce the price to 835 and their final sale price was 800,000. So in talking to the clients of the subject property, we're not the house in column 3. We're also not the house in column 5. We're somewhere in the middle. So what does that look like? We had shared that we had hoped we could get them between 850 and 860 for their condominium, but in order to do that, we thought it was necessary to start at 825 or 835. And if we wanted to be really aggressive with our pricing strategy, we could even start as low as 800, because then we would reach a market of buyers that were looking up to 800. And then we reach a whole nother market of buyers that are in the 800 to 850 range. So it kind of allows you to reach two different markets and hopefully increase that exposure, get multiple offers and have that price increase. Unfortunately, that's wasn't the strategy they wanted to go with. They did sell their home and their final sale price was 815, but they did have a price reduction to get there. So Here are two examples that I thought would be good for you to look at for a couple different reasons. First, one is North and Lake Stevens, and the other is in Linwood. So both very desirable communities. However, these homes are very, very similar. So they are similar square footage, bedroom count, bathroom count, lot size, and they both have only had one owner and are fairly new construction. The Lake Stevens home was built in 2019 and the Linwood home was built in 2020. So knowing that they are very similar homes, we can see that Linwood has a much excuse me, Linwood has a much higher price point. And that's really because of the commuters, um, just how favorable it is for commuters. We're at the I-5, I-405 interchange. We have the light rail there now. So Linwood is really desirable for many working people and able to get to their jobs. So you'll see that their price is much higher than Lake Stevens, even though Lake Stevens is a great community. I live in Lake Stevens. I love it out there. But as you'll see here, the Lake Stevens home, they sold for $815, and their growth over 5 years, their home appreciated by 42% in 5 years. When we look at the home here in Linwood, they had a pretty aggressive pricing strategy. You'll see they started at $799, $950, and they sold in 5 days for $950,000. That's nearly 20% over the asking price. And this 950 value, I will tell you, is also a very strong value for this particular home. I think that it was probably around a $900,000 home, but because of the activity they had, it went all the way up to 950, which is just fantastic for those homeowners. Over 4 years, not 5 years, 4 years for the Linwood property, they gained 31% equity in their home. So just fantastic. It's just another depiction of how strong our market is here in Washington State, regardless of highs and lows. And really, again, when I think about the changes from 2020 to now, it's gaining more stability and more regularity in the market. And it's just more reliable, which I think is helpful to people that want to both buy and sell, because we know what to expect and we can make better determinations on how to format a strategy that's most appropriate for each individual client. So when we look at Snohomish County home values, year over year, that growth this last year, 8.2%, single family homes, 10.6%, condominiums, 9.4%, and all of the Northwest MLS, so remember that's outside of Washington State as well, 5.5%. I think it's important to note here that the single family residences are outpacing the condominiums by, a third, which is pretty substantial. And I do think that we'll see that gap continue to grow as our state prioritizes doing more high density housing, which is just going to make those single family residences more valuable and more rare. So there'll be a higher demand for those, which I think is going to really increase the value on those. Our current averages, so this is December data here on the left. And so our home sale price was 808,000, single family residences, 884, and then condominiums 598. If we go back a year prior to that, to January of the year before, you can see the comparison here. So average home sale price was 738, single family residence 790, and condominiums 542. So again, we can see that percentage growth over the 1 year. And so when we're thinking about that impact of the interest rate and going, oh gosh, it's going to cost me an extra $3,000 because the interest rate is, a 0.5% higher than I want it to be. Well, you're right. It is going to cost you $3,000 that year. But don't forget that in 1 year, this home price, the average home price, went from 738 to 808. So there was a $70,000 gain there. 70, $60,000 gain there over a year. I think that is worth the extra $3,000 investment into your future, but that's your decision to make. Well, here are some takeaways. I hope you really enjoyed today's presentation. Just wanted to leave you with a couple last thoughts. And again, if you have any comments or questions, feel free to drop them in the comment box below, or you can reach out to my team as well. I have our information on our last slide. So market conditions. 6% is likely here to stay for those interest rates. Affordability means high density housing in the state's eyes. So know that those changes are coming to our communities. We do not have the ability to stop that. We just have to learn what our priorities are and what kind of communities we would like to live in to meet our priorities, because our communities are going to continue to change and evolve. Single family residents will likely outpace the market in equity over time. Historical trends and economic growth to our communities make our housing market reliably strong. So again, when we hear these things in the news that may be targeted to incite some fear or some anxiety, and maybe, they may portray like some instability within our housing market. Again, we can look at an individual data point and see where they're coming from. However, when we look at all the data collectively, and when we consider the economic factors that are unique to our region here in Northwestern Washington, our housing market is strong. The demand remains strong, and we can all feel very confident that our investment into real estate is going to have that long-term return for each of us. And that's personally my why, is I want to help every person have long-term wealth, both for themselves and for their families over time. So I think real estate is a great pathway to doing that for you. So buyers, remember that inventory is limited, and so position yourself so that you can act. Get pre-approved. You can even, with a pre-approval, go as far as getting your pre-approval through underwriting. So if you do find that right house, and maybe it does have a really good pricing strategy, it's competitive, there are multiple offers. If you're through underwriting with your pre-approval, that's going to look a lot stronger on paper and help you potentially outbid other offers on that property. Also, buyers, don't expect those interest rates to drop, and know that there are down payment assistance programs available for both first-time home buyers and also anybody who is going to be living in the residence. Down payment assistance is not available for buying a second home or an investment property, but there are other ways that we can do that, especially if you plan to rent the property. There are rental credits that they will give you to help you get approved to buy a second property. So we can talk more about that. Anticipated growth presents an excellent investment opportunity. We loved seeing that 30-40% over 4 and 5 years. If we think, or if you think that you can't get into your dream house right now, that's okay. Every home can be a stepping stone, because you're going to gain that equity, and it's going to help position you to get that home that really checks all your boxes down the road. For our sellers, understand the importance of your pricing strategy for the market you are in. The market we're talking about today might be a different market in a month from now, and that's okay. That's a good thing. That's an indicator of a healthy housing market. But it's really important for you to have an appropriate strategy for the current market and be working with an agent that is educated on the market trends and that can help inform you of those things and position you to make good decisions. Our year-over-year home value growth of 5 to 10%, that's exceptional. And again, in Snohomish County and in South Everett specifically, South Everett has outpaced the rest of Snohomish County, and they are at 14.9% year-over-year growth. So I know we talked earlier about how Everett's paving the way. I really think Everett is a great place to invest. And I do think that all of our communities are really great places to invest, but that valuation piece is really strong, specifically in South Everett. Available inventory impacts activity. So that's something to consider for our sellers. What's happening in your neighborhood? Are there other homes for sale? If there are not, then that could be a really great opportunity for you to maximize your return. There's more that we can think about with that. And my team is able to send you fact sheets specific to your individual neighborhood, so that you can see how many houses are listed for sale. What's the average price? How long is it taking homes to sell? Are they getting above asking price? We can give you a little data sheet for your neighborhood, which I think is a great way to just stay current if you're thinking about making a real estate decision. And it could be in the near future, or maybe not so near future, but staying informed is a great way to just position yourself down the road. So again, my team is Love Where You Live. We are out of Windermere and Alderwood. I'm really proud to represent the Windermere brand. Our office in Alderwood is the highest, does the highest percentage of sales in all of Snohomish County. It's a great community to collaborate with and just to hear about things that are happening in the market because we do such a high percentage of the sales. On my team, Love Where You Live, I work with both my dad and my partner. My dad, Gary, has been in real estate for over 35 years. I carry an MBA, and then my partner, Luke, has an extensive background in finance and investing. So we're a very well-rounded team, and we work great together, and we'd love to work great with you as well. So our services are listed here, but really we're just meant to be a resource. And today I just wanted to share information because I think that this information is so important for every person to know. And I see a hole in our community and this information is not readily available. So I hope you enjoyed it and I look forward to bringing you more updates like this in the future. And if you have any questions, maybe it's about the market in general, maybe it's about your individual situation, please don't hesitate to reach out to the Love Where You Live real estate team out of Windermere Alderwood. All right, take care for now. Bye-bye.